clearly if you look at the organic growth, we have always maintained that we are very strong in digital transformation services, and that's the key growth driver. One key insight we are getting from enterprises is that digital is no more a discretionary spend. Increasingly, customers are seeing it as a key way to transition their business, and those spends consequently are increasing. Particularly in our top 10 customers, that's becoming a reality. And early in the year, we had shared that amongst our top 10 customers, there's one customer who's declining. And if you factor that customer out, our top 10 customers have grown 20.7% year on year, and that has really driven growth. The second reason why growth in quarter two has been very strong is that we closed a few large deals in quarter one, and a lot of them we have started executing. And in the early part of the execution, clearly the revenue goes up before it gets into a steady state. So that has also driven growth. So the primary growth drivers for the strong organic growth is really the momentum we are seeing in digital, our top 10 customers growing strongly, as well as the large deals which we closed in the last quarter.
Okay. Also, vertically, it's been a broad-based performance. If you could tell us what's really driving the traction as far as developed markets are concerned. Also, you had alluded to some sluggishness in the retail and CPG segments there. So, have things really improved there? If you could tell us.
Yeah, I will take the second question first. The retail CPG segment is improving a lot now. We are seeing a lot of traction in retail CPG. Particularly, the retail industry have a lot of investments coming up in retail. In digital. So in the Western markets, what is happening is they have taken digital as an important focus for them, and a lot of investment is happening on their digital strategy. It is, as KK was mentioning, it is no more a discretionary spend. They are using this for not only efficiency, also reach out to the customer, and it is going to help them improve their revenue. This is the focus area for the Western market, and retail CPG segment is one of the pioneer in leading in from the digital front.
Maybe I'll just add a few observations. I think your point on retail was really valid. But what you've seen is, since we see strong traction in digital, this quarter our retail CPG group has delivered an 8.6% quarter on quarter, which is very strong. And going forward, we anticipate that momentum to continue. And your question on developed markets, we continue to see demand momentum in North America very strong. This quarter, North America grew 9.1%. And if you look at the last 3 quarters, the lowest growth they've had is 6.3% quarter on quarter, which is very strong in terms of quarter on quarter growth. What is certainly heartening to us is Europe, which was a little soft for us, has also grown 10.1% quarter on quarter, which I think is extremely good.
Now coming to the acquisitions that you announced last quarter, they have actually boosted your revenues, especially in the digital space. If you could tell us what contribution do you expect from Bluefin and Relational in the coming few quarters, and also KK, want to get your take on the margins front, because brokerages have indicated that there's not much growth there to improve. Among one of the factors is that Bluefin's margins is lower than the company's average. So if you could tell us what's happening there.
See, clearly we see both Bluefin and Relational Solutions helping us consolidate our leadership in the digital space. Like we shared last time, we see enterprises wanting to make their back-end infrastructure digital friendly, which is where I think Bluefin, with their world-class SAP HANA expertise, really helps us address the back-end portion of the digital transformation also. So clearly growth with both the acquired entities, both Relational Solutions and Bluefin, will be ahead of Mindtree's growth rate. On the margin front, it is true that Bluefin is a high-end consulting, on-site centric business, very UK-centric business. So the margin profile of Bluefin tends to be lower than the Mindtree profile, which is why you see on a consolidated basis, we've had almost a 50 basis points depression in margins, while our standalone margin is 19.1, our consolidated margins are lower. But we are working on methods to see how we can bring it closer. And in a 2-3 quarter time span, it will not come to Mindtree's margin level, but certainly will improve the margins on Bluefin.
Jagan, if you could tell us how's the deal pipeline looking like, in terms of conversion rates, and also which areas are you seeing traction?
Okay. Our deal pipeline continued to be very strong. We have signed contracts worth 193 million this quarter. About 130 million is renewal, and about 63 million is a new contract, which is also very good considering the indicating a strong pipeline growth for us. Out of this, about 159 million is actually executed within 1 year, and 36 million is actually for more than 1 year. If you take that out of this 193 million, 105 million is coming from digital. Compared to what we have signed about 60 plus million in last quarter, we have had 105 million of digital contracts signed during the quarter. This shows a very strong pipeline for us, and also strong growth momentum in digital business.
Find us on Facebook at facebook.com/etnow, and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.